Hi guys, I welcome you again to another exciting session of the BY class. Once again, if you are new here, I go by the name Watson Samuel, but you can call me BY Samuel. And yes, I welcome you to the BY class, where we make fundamental and complex lessons very easy to comprehend. So stay tuned because we have a lot in store for you. So in today's lesson, we will be looking at the effect of transactions on the accounting equations. In the previous videos, we learned about the accounting equations. And this time on, we are going to look at the effect of the transactions on the accounting equation. So stay tuned. Get your pens ready and let's get started on rewriting the stars. So to begin with, let's start with the effect of the accounts or effect of transactions on accounting equation. So we are going to start this very thing with example. But before the examples, when we say effects can be either positive or negative. It is something that will cause something to change. That is the basic meaning of effect. So to better understand this, we are going to take the example given here. So the example says the following transactions relate to Kwame, a sole trader for the month of March 2004. So from here, you can even get to know that the owner of the business is called Kwame. So it relates to Kwame, who is a sole trader for the month of March in the year 2004. Now, on 1st March, he, which is Kwame, started business with 1,000 Ghana cedis cash. He started business with 1,000 Ghana cedis cash. And then on the 5th of March, he bought goods worth 250 Ghana cedis on credit from Kofi. Kwame bought goods 250 Ghana cedis on credit from Kofi. On the 10th, he contracted a loan of 500 Ghana cedis and opened a bank account. So when he collected a loan, he opened the bank account. And mind you, he opened the bank account in the name of the business. Whenever you see something like this, it is in the name of the business. If they don't specify it is in the name of the business, it will be in the name of the owner if only they specify. So when it is in the name of the owner, like something like a private use, they will indicate for private use. But if you see it raw like this, it is in the name of the business. On the 25th, he paid Kofi 250 Ghana cedis cash. And then on the 30th, he withdrew 100 cedis for private use from the bank. So now let's look at the effect of these particular transactions on the accounting equation, how these transactions should be treated in the accounting equation. So let's look at the solutions. So with the solutions, on the 1st of March, they said he started business with what? 1,000 Ghana cedis cash. He started business with 1,000 Ghana cedis cash. So first, we have to identify the two parties involved within this transaction. The two parties involved within this transaction. And obviously, whenever you hear the word started business, that means the owner is starting business. And we say when he's starting a business and he's introducing something inside, that thing is referred to as a capital. So the very moment you see a transaction like this, keep it in mind that the first account or the first item within this is a capital account. So we have the capital. And what was he starting the business with? He was starting with a cash. The cash of what? 1,000 Ghana cedis. So the two transactions or the two accounts we've identified within the 1st March transaction is what? Capital and what? Cash. Now, he is introducing it into the business because the business at a normal or at the real state, I told you, the business at the real state will have a zero capital or will have a zero property. So because he's now introducing 1,000 Ghana cedis, the capital of the business is now going to move from 0 to 1,000. So that means there has been an increase in capital from 0 to what? 1,000 Ghana cedis. And that is it for capital. So there is an increase in capital by 1,000 Ghana cedis. And now, on the side of the business, I told you again that the business on its own has no property. So because he has introduced this money, which is a cash, into the business, now the business is also going to have a money which has moved from zero to what? 1,000 Ghana cedis. So in this case, there has been an increase of capital, which is 1,000 Ghana cedis, and there has been an increase of the property of the business, which is the cash of the business, now moving towards 1,000 Ghana cedis. So the first transaction, which was conducted on the 1st of March, is increase in capital 1,000 Ghana cedis and increase in assets, basically cash, which is what? 1,000 Ghana cedis. Now, on the 5th of March, they said he bought goods worth 250 Ghana cedis on credit from Kofi. He bought goods on credit from Kofi. Now, the very moment he here bought goods and they didn't specify the actual thing we went to buy, you create purchases account. You create what? Purchases account. So the very moment he here bought goods without them specifying what we are buying, it is a purchases account. But in this case, because we are looking at it within the accounting equation, the goods here is representing the stock. Because we are looking at it within the accounting equation, the goods here is representing the stock of the business. So if it is representing the stock of the business, we bought on credit from Kofi. So we are going to have a creditor, HSA, or which means that we've borrowed or we've bought goods without paying, and we are expected to pay. So because we are expected to pay this 250,000 Ghana cedis, it is a liability. A liability because we've gone for the items, but we've not paid for it. Or in other words, it is just like it has been given to us to start a business, but we've not paid for it yet. So that is a liability. So Kofi becomes our creditor. Kofi becomes our creditor because he has given us the items on credit and we are expected to pay him. And anything that we are expected to pay, any obligation we are expected to fulfill, is called a liability. So initially we were not owing anybody, but the very moment we went to buy this thing without paying, now our liabilities will increase from zero towards the amount we are owing now, which is the 250 Ghana cedis. So there is an increase in liability, which is the creditor Kofi, 250 Ghana cedis. And then after that increase, we got some items into the business. And those items we got were the stock, which is the goods we went to buy, the stock. So now our stock or the goods within the business is also going to increase from zero to 250 Ghana cedis value of goods. I hope the second or the 5th March transaction is also understood. Now let's move on to the 10th March transaction. They said we contracted a loan of 500 Ghana cedis and opened the bank account. So going for a loan from the bank, we were not owing any bank, and now we've gone. We were only owing Kofi, and now we've gone to borrow another money from the bank. So now our owing is going to move from 250 Ghana cedis to a different value, which is going to be 750 Ghana cedis. Why? Because we've gone for an additional 500 Ghana cedis from the bank. And you know, the bank, when we go for it, it is something we are expected to pay. And anything we are expected to pay is a liability. So now our liability is going to increase because on the 5th of March, our liabilities was only 250. And now we've gone for an additional 500 Ghana cedis. So this 500 Ghana cedis is going to add up to the 250, becoming 750. So in general, there is an increase in the monies we are supposed to pay again. And then what did we do with the money? We opened a bank account for the business. So when we opened the bank account for the business, we introduce that money into the business. Okay, into the bank. We introduce that money into the bank. So we went to open the bank account with the 500 Ghana cedis. So now our bank is also going to increase because initially we were not even having a bank account. And now we've gone to create a bank account and we've invested this money into the bank. And for that matter, the bank's assets is going to increase. The business asset is going to what? Increase. Because now we have a bank account and we have money within that bank account. So there is an increase in liability, which is the loan, and there is another increase in assets, which is the new bank account we've created for the business. I hope this is very clear. Now we move on to the 25th of March. Pay Kofi 250 Ghana cedis cash. Pay Kofi 250 Ghana cedis cash. So you see here on the 5th, we were owing Kofi. So the very moment we went to pay Kofi's money to him, now it is going to reduce the amount of money we are owing, because we were owing him 250 and we went to pay the 250 for him, or we went to give it to his money to him. So because we've gone to pay the money to him, now the people we are owing is going to reduce, or the amount we are owing is also is what is going to reduce. So there is a decrease in liability, which is the amount we are owing to Kofi the creditor. There is what? A decrease in liability. And now how were we paying Kofi? We are paying Kofi by cash. We were paying Kofi by cash. But mind you, we started with what? 1,000 Ghana cedis. And now we've removed 250 from it to go and pay Kofi. So because we've removed 250 to go and pay Kofi, automatically the amount we have as cash is also what's going to reduce. So decrease in liability and then also a decrease in assets. Decrease in liability and also a decrease in assets. I hope this is very clear. Now, on the third, though the last or final transaction in this example, we drew 100 cedis for private use from the bank. We drew 100 cedis for private use from the bank. So you see here, they've indicated that the owner, which is Kwame, he has removed 100 cedis and he has used it for his personal use, his private use. So he didn't use it for anything in relation to the business. So because he didn't use it for anything in relation to the business, it's identified as a drawings. It's identified as what? Drawings. And this money was taken from what? The bank. So this drawing has gone to reduce the capital. Why? Because he invested 1,000 Ghana cedis and now he has come to take 100 cedis from it completely for his personal use. At least when we were paying Kofi, we know we used it to purchase something for the business. But this time, so that money is still within the business. But this time around, the 100 cedis is for his personal use. So that means it is going out of the business at all, like completely. It is going out of the business. So it is no longer going to be a property of the business again. Okay. Pay attention to this very carefully. When we were removing 250 for cash, 250 cash to go and pay Kofi, mind you, we went to buy the thing. So like the money has gone to replace the things we went to buy. And the things are now in the name of the business. So it's like the money is still within the business. But this time around, he came for 100 cedis for his personal use. So this time around, it is going completely out of the business. So because it's going completely out of the business, it is going to be recorded as a drawings. And that is going to reduce the money he started with, which is 1,000 Ghana cedis. It's going to reduce it to 900 Ghana cedis. So there will be a decrease in capital. A decrease in capital because he started with 1,000 and now he has come to remove 100 cedis for his personal use. So the capital has been reduced. So a decrease in capital, which is the drawing, and then the other part. Which part of the business did he remove the money from? He removed it from the bank. So because he removed it from the bank, there will be another decrease in assets, which is the money in the bank. So there will be a reduction of the 500 Ghana cedis money in the bank to what? 400 Ghana cedis. So there will be a decrease in assets, specifically bank. I hope this is very well understood. So that is all for transactions in relation to the effect of transactions on the balance sheet. So sorry, the effect of transactions on the accounting equation. The effect of transactions on the accounting equation. So these are examples or trial questions for you to try and answer on. So in a balance sheet of the sole proprietor, A is equal to C plus brackets open P minus D brackets close plus L. So you have to identify what the various letters are. We've discussed some of these things, or let me just help you with the trial. So the A here, we've talked about assets. So the A is referring to the assets, and then the C here is referring to the capital. The P is for the profits of the owner. The D is for the drawings that the owner made during the period, and then the L is the liabilities. So in all, you see that all the things here, the capital plus the profit minus the drawing plus the liability, they will all add up to form the properties of the business, which is the assets. All of this is clear. And they say we should differentiate between fixed assets and current assets. So fixed assets are basically not to be sold or not to be converted to cash within a financial year. So they are basically there to help in the running of the business, while current assets are to be converted into cash within one financial year. So we have to look at the various transactions and then look at the effects they will have on the accounting equation. So the first one says cash introduced into the business by the proprietor. So automatically we have cash and we have capital. So we are going to have an increase in capital and then also an increase in what? The assets, which is the cash. An increase in capital and an increase in the assets, which is the cash aspect of the company. Now the second one says goods previously purchased returns to supplier. So some people came to purchase items from us. Okay, they came to purchase items from us, and they've brought the items to us. Okay, they've sorry, we went to purchase item from other people, and then we returned some to them because there were defaults or there were problems. So what do you think will be the effects on the transactions in the accounting equation? And then the third one, bank charges on business or business bank accounts. So the charges that they are charging us for creating a bank account, what would be the effect of these transactions on the accounting equation? The fourth one says goods sold to customers on credit. Goods sold to customers on credit. So the goods that we've sold to the customers, what will be the effects of that on the accounting equation? That is the once you sold on credits, what will be the effect on the accounting equation? Cash discounts received from suppliers. That one too, what will be the effects on the accounting equation? Then finally, proprietor, which is the owner, uses business money for petrol in his personal car. So what will this also do to the accounting equation? So this is for you, and thank you for staying throughout the session. Once again, I am BY Samuel, and if you find the content useful, kindly like and put all your questions in the comment section. You can also share for others to access it, and then most importantly, subscribe to the channel so that whenever you make an upload, you get a notification and then you watch the video as we learn the journey, or we learn this journey together. Yeah, it's a new term. If you don't get it, Abby, forget about it. So have a great day, and then see you in the next video. Bye bye for now.